Did we just avoid a recession with these trade deals? Let's talk about it on Today in Mortgages. Hey, what's up, Dreammakers? Welcome back to the show. We're talking about what's real, what's hype, and what you should actually be paying attention to out there in the world of mortgage and real estate news. It's Today in Mortgage. And Rich, today we're going to deviate and talk general economy. You ready?
As ready as you can be.
As ready as you can be. Well, of course, we will bring this back to mortgages and our industry. But first of all, Rich, some big news happened over the weekend, and we got some more details on it this morning. We're recording in this on Monday. What happened with this trade deal with China?
China and the U.S. agreed to lower tariffs to 30% on products that we're buying and 10% on what they're buying from us. So, Michael, this is all great for the economy. When certainty happens, then people can plan. Businesses can plan. Home buyers can plan to buy a home because the interest rates likely, stay the same. They're not going up and not going down.
Well, Rich, there's good news and bad news on this. The good news is that my daughter can now have $30 instead of two at Christmas. And the
Well, I
bad
think
news
he
is
ended at 5, Michael. Let's be fair.
I was going to say the bad news is that my daughter can have $30 instead of two for me. So, but Rich, bringing it back down to our level, talking about mortgages, there was an article today in Housing Wire that says what happens to mortgage rates with more trade deals, and the subtitle says if we avoid a recession, mortgage rates could stay elevated. So, Rich, let's just talk about that headline right now as we get some of these trade deals that come in. Economy kind of levels out, things become a little bit more predictable. What happens with our industry and with rates?
Well, this article was written by Logan Motoshami, who's a trusted, housing expert and economic analyst. So he's really focused on the housing industry. That's where his specialty is. And what he is suggesting is that if this trade deal happens, if this trade war, all this uncertain stuff that's happening with trade gets ironed out and we get deals, we're likely to avoid a recession. So that's great news. But for us in the mortgage business, that just means we're going to have elevated interest rates for a considerable time, definitely through the end of the year. I mean, if we look at the CME group, the Fed Watch tool on the CME group's website, they give chances, percentages on whether the Fed is going to lower interest rates. Now, we don't know what the Fed's going to do, but we know the Fed has two mandates, and that is making sure we get maximum employment and that we keep the economy, humming along stably. And they see that in the numbers right now. Employment, our participation rate, well, not the participation rate, but the unemployment rate is relatively low at 4.2%. And the Fed's comfortable with that. And the economy, inflation over time is coming down. So that's all good news. So there's really no reason for them to drop interest rates. And the CME group is suggesting the best chances we have really start in September. And that would be likely a 25 basis point reduction.
So, Rich, what we're seeing here is, like you said, things are looking, macro from the Fed's perspective, pretty good. So why mess with the status quo? Rich, let's kind of flip that on its head, though. Say, trade deals happen. We see a drastic reduction in inflation, and we don't have that kind of concern anymore. Would the Fed then respond by easing pressure on rates to just kind of boost some of the things that are hurting the economy in other areas, like housing, for instance?
Yes, likely. If we hit that, remember their mark is 2% inflation. So if we hit that 2%, job done well by the Fed. That's what they would think. And then it's time to start bringing it down. But we just don't know when that's going to happen. So, there are all kinds of things that can happen. But if we just keep going as we are right now and those trade deals get nailed down and everything's good for us, then we're likely to see elevated interest rates above 6.5% for some time period, according to Logan Motoshami. So we don't know, but I'm happy for a stable economy. I'm happy for employment. That means at least there's home buyers that have jobs that can still buy at the interest rates where they are. But we all want interest rates to come down because That would boost the economy, but then you got to worry about inflation ticking up. So it's a delicate balance.
Rich, one of the things that I've been noticing is that kind of all this uncertainty we talked about last week that we're seeing in the economy has caused a lot of hand wringing in the news outlets. And it seems like we're always kind of getting these negative headlines.
Mm-hmm.
But one thing that I like to do is kind of look down into reality when all this is happening. Rich, um, looking at just our numbers and the application numbers and closed loan numbers that we had with some of our best people last month, saw some really good signs out there, some good numbers. And so I like to look down at the reality and see how we're doing. Things are kind of looking up here on the local level. Is that what you're seeing, Rich? And how can
Yeah.
people get involved?
Well, listen, the top 10, top 20% of originators around the nation, they're all doing better
Hmm.
because the lower 80% are either waiting for rates, they're not doing the extra that they would normally do, they're sitting back and waiting. The top 20% are scraping some business from the bottom 80. So that's what's happening right now with originations. But we've had some incredible performances. I mean, we had a loan officer do over 40 loans last month. We've got another one do 29. Like, things are happening. And but it's the people that are getting after it. They're just not taking their foot off the pedal. They're really getting after it because they know the average originator's checking out. They're just not fully engaged because they think interest rate drives everything. This is a time to get out there and get after it. We've talked about this many times, Michael. Interest rates coming down are only going to make it tougher for people to buy homes because the competition, everybody is going to want to come out and buy the home. There's a backlog of home buyers looking for homes.
The loan officers that are positioning themselves well in the market right now are going to be able to capitalize on that. So if you're
They're going to
interested
king
in
it. They're going to king it, Michael. The guys that are getting after it today are going to king it when rates come down. It's really time to regrip and get out there and get after it right now and stir some things up. There's lots of things that we can do right now today.
Absolutely. And those are the type of people that we are looking for here. And we want to put the right technology and support behind them to help them succeed all the time. So if you're interested in knowing more about how to join the best network in mortgages, click the grow link below. We'll get you connected probably directly with Rich. He'll give you a
For sure.
private tour of everything there is to offer here at the network. Rich, anything you want to say on this, other news happening before we sign off?
Yeah, let's hope for a great economy.
Mm-hmm.
That's the downside of being in the mortgage business. A great economy means higher interest rates generally, but we don't want a recession. We want people working. We want good prices. There's so many good things, and rates will come down over time. But listen, if you're at a company right now and you're one of 3,500 originators working for a large company, you're just tiny. You're not heard. You're just a part of the manufacturing process. If you want to be heard, you have that entrepreneurial spirit. You need a company to really back you and defend your brand. If you have a brand, come to Network Funding. Take a look at what we offer. It just, for me, I'm like looking at some of these big companies. You've got 3,500 originators. You've got 100 executives. You have so much operational people. That is a lot of price that's built into interest rates. You want a competitive interest rate at a company that supports you so that you can do more. Network Funding's your company.
That's right. Do more you here at the network. So, Rich, good word with that. Thanks so much for making us smart on all things mortgage and real estate. Thanks to everyone out there for watching, listening, wherever you are. We appreciate you. We'll see you next time on Today in Mortgages. Today in Mortgages is produced by Network Funding LP, which is an equal housing lender, NMLS 2297. The content of this program is meant to be a commentary on mortgage and real estate news, and any discussion of rates and or products should not be taken as an individual mortgage or home buying advice or pricing estimates. And any commentary on this show should not be considered a promise to make a loan. All applicants for a loan must qualify, and you should consult a professional regarding your individual loan scenarios for your financial situation. Visit our website at nflp.com/licenses for all state licensing and other legal information.